This morning we've heard from a range of companies including AMP, Telstra and AGL. What's it looking like?
Mixed results, Tom, and we've heard from a whole lot of companies today. I think today's one of the busiest days of the entire year for the reporting season. But starting with AMP, they had a pretty tough half year. Their profit dropped 42%, underlying profit fell to $149 million. All of AMP's business units took a hit due to COVID-19 related impacts. They did sell their life insurance unit, though, during the year. They finalised that sale, which was worth $3 billion. And with some of those sale proceeds, AMP is going to pay a special dividend of 10 cents per share to shareholders. And it's also launching a $200 million share buyback. But really, the chief executive was just on a conference call a minute ago, asked a lot of questions about the abrupt resignation of Alex Wade, which was the former CEO of AMP Australia. He resigned just a week ago. Was asked a bunch of questions about the resignation and didn't want to talk about it. So I think that is going to overshadow today's AMP result. Looking to the next company, Telstra, their profit also fell due to COVID-19 related impacts, down 14.4% to $1.8 billion. Revenue also fell 6% to $26 billion. The hit from COVID-19 was estimated at $200 million of its earnings in the financial year. And looking ahead, Telstra expect COVID to take $400 million from its earnings over FY 2021. Chief Executive Andy Penn said the NBN was continuing to take revenue away from its fixed line business, saying in a statement that NBN wholesale pricing remains the largest negative impact on its fixed line business. Telstra is going to pay a final dividend of 8 cents per share to shareholders. And AGL, the big energy company, its underlying profit for the annual underlying profit fell 22% to about $816 million. Profit was driven down by an electricity outage at its Loy Yang power station in Victoria, falling gas sales and lower wholesale electricity prices. AGL says it's facing significant headwinds in the 2021 financial year, including sharp falls in wholesale prices for electricity due to the pandemic. It's also expecting higher credit losses from customers due to customer hardship related to COVID-19. So its underlying profit in FY 2021 is actually expected to be about 19 to 31% lower than the profit it's just reported today, and its shares have fallen about 6%. The retailer, though, is going to pay a dividend of 51 cents per share, and I'm going to be speaking to the chief executive of AGL a little bit later today, Brett Redman.